The market gives us a nothing burger for Fed Day. Or does it? This is Invest with Jacob. Okay, guys, so in yesterday's video, we were talking about the fact that we were looking for a small pullback, then the bulls to push higher. And so far, that's exactly what we've seen, as the market gave us a small pullback yesterday, and the bulls are now set up for an overnight push. The question is, can they follow through? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, as always, before we jump into the charts, we are going to take a look at our indicator results for the day. It was Fed Day, and Fed days are pretty hard to trade in general because the options pricing is so elevated because of the volatility involved on Fed Day, but we still had a couple of things to take a look at. So let's jump into the chart and take a look. Okay, guys, so here we are on the 5-minute SPY chart, and if you're new here, we have our custom day trading indicator and swing trading indicator. So it's for both day and swing trading. If you're not a day trader, that's okay. We went over earlier in the week NVIDIA and how we saw the sell coming long before it dropped, as well as Apple's sell. Last week, we went through that, a big 6% drop on Apple. The indicator knew before it even happened. So it's a great day and swing trading indicator. And what you see here is this is TradingView. You do have to have a TradingView account to use it. It's called Invest with Jacob Pivot Point Pro right here. You hit the eyes and you can see the buy and sells go away. What you have on the left in yellow is pre-market trading, and on the right is post-market trading. You do need that on in order for it to work properly, but we don't trade those hours. We only trade the white in the middle, which is our regular trading hours. We also stop trading at 10 a.m. Pacific Standard Time, 1 p.m. Eastern Standard Time, and that's because after that, on most days, you know, Fed days are a little different, but on most days, the market's pretty choppy and sideways and doesn't give a lot of great trading entries. So we stop day trading at 10 a.m. on those days. So what we got today is you got a lot of chop. I ended up sitting out the day. We took a couple of early trades. One was a winner and two losers. You had some chop here, but the indicator overall had a pretty good day if you stuck with it. I don't, because again, Fed days are a little expensive and not great trading days, so it's just one to kind of sit on your hands if you want to wait till it's over and kind of trade tomorrow's volatility. It'll be a much better setup and give you much better options for that. But if you did take it, you had this buy right here that ran up a couple points. This was a small winner, and then you had this really nice sell right here at about 602 or so, and they took it all the way down to 599.60. So a 2.5 point drop right here. Really nice day trade before the 10 o'clock hour. And then obviously they chopped, and then the Fed happened, and then the rest of the day. So like I said, we don't trade the Fed day very often because it's so choppy before the Fed announces and so volatile after. But you did have a couple of winners here on the back end, even with the nasty chop to start the day. So the indicator, even on Fed day, did okay. Wasn't one of our best days, but you're never really looking for these types of days to be great winners in most cases, because the second half of the day is when all the volatility happens. So that's where we're at. Guys, if you want to be part of this, go back, check out my videos. This is a video where you can see how effective it was even on Fed Day, but I chronicle this every single day. The indicator absolutely crushes the market. The day before Fed Day, Tuesday, was a monster day. We absolutely crushed it that day. As you can see on the screen here, one of our traders bought the yearly plan, and he made his money back the first week, and then the second week had about 5 times that in profit. And he paid for that for the whole year. So he's already, in just 2 weeks' time, more than 5x'd his investment using our indicator. Guys, I want you to have it. It's helping so many traders make trading easy. If you want to check it out, there's a link down in the description. Click that link. It'll take you over to our webpage. Once you're there, it'll take you to our indicator page. You go to membership plans right here, TradingView courses and indicators. It's $59 a month or $590 for the year. We do have a 30-day money-back guarantee on both the yearly and the monthly right here. So I want you to get it and use it because I know you're going to love it. But in the instance that you don't love it, simply let me know and I'll refund your money, because that's how much I know you're going to love it. If you want to hear more about it from users and not just me, because of course I'm going to say it's great because it's my product, you can scroll down and see what everybody has sent me, all of the great items as well as what I put in the video. People are loving this indicator. It's helping them make money in the market and understand how the market moves without having to look at a million charts and a million moving averages and all these different things. It does it all for you in a simple, easy way. Check it out. We'd love to have you in there. Now let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. As we talked about yesterday, they came into this critical resistance area, the bottom of the gap down, which is always going to be heavy resistance. I told you that it was very likely they would reject that area, give us a small pullback. They needed to hold this low. So far they have. So far we've got the pullback we're looking for, and then the bulls have started to push. They have pushed over a key level of 60.76. Now they got to break through the high from Tuesday. If they can break through the high from Tuesday, I would look for a minimum of a gap fill, but more importantly, 61.51 to 61.81. Putting us back near the highs again. Then we'd look for a pullback into this 61.21 area and continuation on up to the 6,300 overall target that we're looking for. So we are looking for a bit of a squeeze tomorrow where the bulls can push out over the 6,100 area, fill this gap, and ultimately get up to 61.51 to 81. And once they get to 61.51, as long as they stay over 61.02, we are looking at 6,300 pretty directly. Now, if they are not able to break out, or if they fail here, it is possible we are starting a bigger move down where this would be a wave 1, and this would be a wave 2, and then you're starting wave 1 of 3 like this. They would come down, test this low, very likely bounce one more time here, and a wave 2 of 3, and then continue to the downside in a much bigger move that can give us one of two scenarios. It could give us a deeper B wave. That is a possibility where we're looking for something like this. They hold this low and they can still push directly higher, or they give us a deeper wave 4 where they come down either into or just below this blue box. I think as of right now, I'm counting wave 4 as in right here, but it is possible they can bring it down over here. Again, my primary path is directly higher towards 6,300 where they do hold this low right here from Sunday night into Monday, and they are able to break out over the 6,100 area. If they do break over 6,100 again, 61.51 to 81 would be the first target area. They don't have to pull back from there, but that's where you would expect to pull back from, and then continuation after that. So market continues to do what we would expect here. We're still looking bullish. We're still looking towards the 6,300 area until or unless they break below 60.24, and then we'll have to start kind of readjusting and looking at potential downside patterns. Over on the NASDAQ. Okay, so on the NASDAQ, again, we were looking for a pullback. We got one. We wanted it to hold that 21,400 area. They spiked just below it, but they did hold that area and pushed higher. And they are almost all the way back up to getting ready to break out here on the NASDAQ. If they do push over this high, we would expect to see 21,959 or so, about 21,900 in that range. We would look for them to get to next, which is the prior high of the A wave. And then we'd look for a smaller pullback off of that into 21.6, and then continuation on up after that into the 23,000 area, which is our overall target for this move up. And then we'll see exactly what kind of resistance we get in that zone. That would be the primary path, and the path that I lean toward right now is the bullish path playing out. We would expect the NASDAQ to outperform and continue to outperform into all-time highs, as it did have a much deeper pullback than the ES. So if we're going back to all-time highs, the NASDAQ needs to outperform, and we have seen that here. And I do think that will continue as long as we stay on the bullish path. Now, can they fail here? Is it possible that you have a bigger move to the downside playing out, and we're going to see continuation in either some kind of double 3 and or bigger C wave? The answer to that, of course, is yes. It can happen. However, it is less likely at this time. They have pushed back through the 764 here, and they're about to break out over this high. And should they break out over this high, I do think the bulls will squeeze, and we'll see that 21.9 area pretty quick. So bullish paths continue to play out. We're still seeing exactly what we would expect on the charts. Nothing has thrown a curveball at us yet. And as long as they continue on this path, we would still continue to look bullish into the end of the week and into next week, just depending on how quickly the pattern overall plays out. So still following the same path we've been talking about for a while now, still pushing up toward our targets to the upside, unless, of course, they break key resist or key support, which in this case on this chart is 21,159. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you over to our webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial. And that's because I want you to get in there. I want you to become part of the trading team. Make sure you love it. Make sure it's for you before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking us out. We also have our educational material, which is our Elliott Wave for Beginners online course, as well as our advanced course. These courses are helping people understand the stock market. It helps you understand how I find these key levels, how I know where and when we're going to pull back, or what levels we're looking for pullbacks off of, what levels we're looking for support. It gives you all of that information and helps you understand these complex markets. In the advanced course, we go through many of the things we're talking about right now. We're talking about being in ending diagonals. So we have diagonals, we have the advanced fib levels. This is one way of finding support and resistance. We also go through double and triple threes. We go through flats, triangles, and of course the trading Elliott Wave portion of the course, which is extremely important to understanding how setups work and how to trade profitably using Elliott Wave and using price action. They're both included in this trading module right here. As you can see on the screen, our traders are loving it and it is helping them make money. However, I do understand if this is too advanced or you're just getting started. So we do have our Elliott Wave for Beginners course, and this course is helping real traders make real money and finally understand the market in a way that makes sense. It's really confusing when good news makes the market go down or bad news makes the market go up. And that's because Elliott knew that the news cycles were garbage long ago. He knew that the key levels mattered. We use them all the time in my videos, and you can see when they hold, how they hold. I can tell you what happens when they break. These are all really important things to know if you want to understand the stock market. This course is 25 videos where we go through 3 parts. It's an introduction where we go through your expectations, your mindset and emotion, and why this works, the chart setup and tools. We go through every tool you need to use with Elliott Wave Theory, how to use it and why, and then our Elliott Wave for Beginners section where we go through each of the waves, the corrective depth theory, the theory of alternation, the corrective zigzag, all the waves, the pivot, anything you want to know to make sense of this irrational market. Now, the cool thing is if you want to get both of these courses at a discount, you can get our bundle pack and get $37 off. But if you want to get them for free, simply check out our monthly rooms as they are included in these prices. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video, lasts about an hour where I go through all of the charts. I answer all your questions. I give you all the key levels for everything, gold, Bitcoin, the Mag 7, whatever you want to see, we go through it and make sure that you have the answers you need for your charts. That alone to me is worth the price of admission. We also get the Elliott Wave for Beginners and Advanced courses. We trade the SPY and the QQQ, and we swing in day trades. So we do trade quite often in my room. But if you're looking for futures trading, individual stocks, advanced trading, and income trading, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as futures trading, individual stocks, income trading, and his reduced risk binary method that crushes the market. It gets you in at a cheap price and gives you big multiples on your money. It's how he structures that trade that's so unique. That's something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, our key takeaways for today. As long as the bulls can hold 60.25, we are looking at a direct move higher. Our next target is the 61.51 to 81 area. Once they get over 61.51, they got to stay over 61.02 to stay immediately bullish. If they do break down through 61.20 or 60.25, we would look for a breakdown into the blue box or below, or potentially a lower B wave here before we press higher after that. Over on the NASDAQ, as long as they can hold 21,159, they do remain directly bullish, where the next target would be the 21,950 area or so. And then we look for a pullback that needs to hold 21,559 with an ultimate target of 23,000 on the NASDAQ. If they do break below 21,159, that would be a big red flag for the bulls and something to keep an eye on, as we could be developing a bigger pattern to the downside. Guys, that is your market update for today. I will talk to you tomorrow.